right, now let's shift to the commodity space and see what's going on there now. We looked at the oil prices, but I know when I had this conversation with Dr. Adesola Sumoni on Tuesday, he shared his expectations from the MPC. MPC is calm. Now, I wouldn't say it's gone, but we have I think Adesola was saying 200 basis points, or FDC was saying 200 basis points, but instead we had 400 basis points. Hi, Adesola Sumoni. Good morning.
Good morning, Ini. Thank you for having me on the show.
Yeah, welcome to Post MPC. It's 400 basis points, not 200. Did it come as a shocker to you?
I mean, it came as a shocker to me, as it did to many analysts. We expected something big, but we did not expect anything this big. I think this is the biggest spike, or this is the biggest increase in the interest rates, in benchmark interest rates in Nigeria ever. So we did not see that coming. We know we expected something bold, we expected something big, but we did not see this coming, no.
Yeah, I guess it's an aggressive tightening to mop up this excess liquidity, about more than 93 trillion naira in circulation, and the inflation impact that it has on the economy and on the currency.
Indeed, like you mentioned, like the other previous speaker mentioned as well, there's excess liquidity in the market, but also two main other factors that inflation is, there's a strong need to anchor inflation before it runs away, pretty much, before we get into a hyperinflation situation like we saw, I think, in Zimbabwe or so. And there's also need to mop up excess liquidity to reduce the pressure on the foreign exchange market, in addition to other measures that have been employed by the bank. So I think that, you know, it's positive, it's a step in the right direction, and we are waiting to see how it how the effect transmits into the real economy.
Yeah, so I mean, you said before inflation runs away. I thought it had already run away. We're almost at 30. But anyway, let's go to the commodity space. OPEC is expecting, OPEC Plus is expected to continue to cut production beyond March. How does that affect Nigeria? How do we see that playing out with prices, especially the tension on the Red Sea is still, I mean, even though we had President Biden promise that something is going to happen, but the major parties involved are not giving that kind of body language.
Indeed, Ini, thanks for that question. I think, like you mentioned, oil prices are trading in a tight range this week, are mainly driven by, number one, we have the OPEC Plus sentiment. There's the expectations that OPEC Plus is going to extend its production cut up until at the end of Q2. Currently, OPEC cut is reducing production by its output by around 2.2 million barrels per day, and that is expected to keep like a floor, the price floor in global oil prices, and expected to keep oil prices in a tight range of around 70 to 90 US dollars. Other factors that are affecting oil price at this moment, like you mentioned, the tensions in the Middle East. Although the effect on oil prices is kind of muted at the moment, we are also seeing build up in US crude stockpiles, which came in at 4.2 million barrels last week, according to data from the United States Energy Information Administration. Going forward, we expect that factors like, you know, the path of the interest rate, which is keenly watched by investors and analysts, the path of U.S. interest rates, I think that would be a big factor. I think U.S. geopolitical tensions in the Middle East will be a big factor affecting oil prices going forward. When OPEC actually, you know, decides to extend production cuts, I think that would be a big factor that affecting oil prices going forward. So all of these factors, I think they're going to keep oil prices trading in a tight range, which is going to be relatively elevated. Yeah. Now for Nigeria, I think our biggest challenge for Nigeria is getting our production up. For the past 1 or 2 years, we've been in a relatively higher oil price environment, but Nigeria has not really been able to reap the benefits of those higher oil price environment, mainly because of production challenges. We are seeing our force majeure by major IOCs. We're also seeing like attacks on oil infrastructure. We are seeing vandalism, smuggling, and all of these factors are kind of leaking. They're causing leakages in Nigeria's oil production. Currently, I think oil production is around 1.2 million barrels a day, when we are able to produce up until 1.8 million barrels a day. So we are not really are reaping the full benefits of the relatively higher oil price environment.
Yeah, well, a lot of questions around the impact there. We still talk about subsidy and all of that, but I mean, I think that's not the day. Let's look at other commodities. Cocoa prices have started dropping. Even when it surged, Nigeria couldn't make the most of it. And we know there's still tight supply from Ivory Coast and Ghana. So now that it's dropping, I mean, I wonder what it would do to the farmers, because they had complained that even when the price was really high, lack of the ability to expand production stopped them from enjoying the profits.
Indeed. So globally, cocoa prices are at record highs globally, and mainly due to two factors. Like you mentioned, we are seeing supply challenges in West Africa, both in terms of harvest and in terms of exports coming out of West Africa, particularly Ivory Coast, Ghana, and Nigeria. Like you mentioned, Ivory Coast exports for last year on year, for February year on year, was down around 32% their exports. And the Minister for Agriculture, the Minister for Cocoa for Ivory Coast expects the harvest for this current marketing year, the main crop for this year should be down around 25%. Similarly, in Ghana, they're expecting that, the harvest for main crop will be down around 31%, which is kind of constricting global supply. But that is also widening the deficit for the cocoa deficit. Currently, the deficit is estimated around 370,000 tons, according to the International Cocoa Board. So what we are seeing, why prices are trending down at the moment, is mainly because of technical trading. We've seen a lot of investors take profit from the relatively high cocoa prices. And for Nigeria, I think even though, just like oil, even though the cocoa prices are relatively high, Nigeria is still not able to fully exploit the higher cocoa price environment for many reasons. But in addition to that, the contribution of cocoa to Nigeria's export earnings, like I've always mentioned, is relatively small. It's less than I think 5% of global total export earnings. However, it is a huge share of the farmers' incomes.
So what about other domestic commodities? Prices there have been scary these days. Do you have any updates?
I mean, you just need to go to the market in it to see the effect of this, to see the prices. So currently, I think all prices, all domestic commodities that we track at FDC are in the red, apart from two commodities, which are onions and palm oil. We're seeing peppers up 100%, a basket of pepper up 100% to around 60,000 naira. We're seeing cement up 50 kg a bag of cement up 67% to 9,500. We are seeing flour up 20%, a 50 kg bag of flour up 20% to 55,000. So generally, things are not looking good at the moment, but they're going to get slightly worse before they get better. But I think it's important to note that following the central bank's the monetary policy committee meeting on Tuesday, there has been some respite in the FX market, particularly in the parallel market. We've seen that we've seen the currency appreciate to around 1,400 against the US dollar, which, if it is sustained, I think also because of the sanity that's coming into the BDC sector, we expect also some injection of FX. The central bank has said they're going to inject some FX into the market, which should kind of help stabilize the market in the near term, and over time that would translate into domestic commodities prices. I also think it's important to note that the federal government has also released some grains from the strategic reserve, which is expected to kind of taper the prices of domestic commodities. Although I should also add that Ramadan is coming, which is characterized by high demand for commodities. So there's these factors affecting commodities prices at the moment. But I believe that the prices are going to trend downwards over time eventually, as the FX situation begins to stabilize and the release of grains from strategic markets, from the strategic grains from strategic reserves, I beg your pardon, begins to trickle into the markets.
Yeah, thank you so much, Dr. Adesola Simoni. We certainly hope that the gap between when these things are done and when we feel the impacts will be shortened. Thank you for your analysis this morning, and you have a great day.
Thank you for having me.